Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it because it's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
This market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so fast.
Seconds to go until the start of trading at the New York Stock Exchange, and stocks are set to kick off lower, a whole lot lower.
eBay is down 6.5%, and really you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
What is going on, YouTube? It's Brendan from Market Makers. That compilation in the beginning for the intro, that was the GFC, my friends. I was at Merrill Lynch when the GFC happened. I was trading energy for the dot-com collapse. So lots of people are asking me, you're seeing it all over YouTube, people saying, get out now, now's the crash. And a lot of people are asking me, when is the actual crash going to happen? So I want to show you guys and talk about some events here in the market, but I'm going to show you on the charts what this looks like from the macro perspective when you can possibly see the next major leg down. So we're going to start here on the S&P. Now, this is the pandemic low, okay? The pandemic low. Couple things to note here. Doesn't matter whether or not you agree with my harmonic wave counts, okay? I had five waves up to our peak here, and I had 5 wave kickouts. Fact of the matter is, I nailed that top very, very close within whatever it was, 30 points, 40 points, and then the decline in the market, 5 waves to the downside. Now, from a perspective here of harmonic cycles, 5 is a completion of a harmonic cycle, 5 waves to the downside, but in reality, what I think this is your massive A leg, this is your massive B leg, this is the B right here, and then we're coming in for the C leg, the next big drawdown. Now, if you look at this from a simple fib retracement from the pandemic low, we hit the 486, 50% retracement, right? 50% retracement, very important. The next leg down would take out that previous low, put you at 32.15 here at the 618 retracement. Let me turn my phone off. The 618 retracement to give us our C leg. And again, the market will declare this is the bottom. Now's the time to buy, ultimate buy on stocks. You see this over and over again, okay? This happens every single bubble cycle. Lots of people predicting downside, but a lot of those same people don't understand market cycles. And there's events that have to happen for us to have a massive slide upside down in price. And we're going to talk about that in this video. But that would be the next leg down, coming down this way. Zoomed out here, as you can see on my chart as well, you can see my channel within a channel, which JP Morgan got a hold of. But my channel within a channel here, and we've been trading this all along the way. We'll look at the pivot pattern, but these were pivots, 9% move down, pivot, 9% move down, other pivots, much smaller moves down, and the big rally up, okay? So the key event, let me zoom in a little bit so you can see this. The key event coming up for the markets right now is this event right here. Right here at this fourth wave that we had, this was Jackson Hole. It takes place, Powell comes out, gives a little speech. You remember famously, he supposedly ripped up his speech the night before and basically talked really tough on inflation. Big 17, 18% rally up. Big 19% move down. That was last Jackson Hole, okay, last year. That's when that event happened. So what we have coming up is August 24th, 26th. Again, we just hit our pivot point today, Monday, August 14th. The S&P's been on a decline. So we need to look at this. We'll zoom in and we'll start at the beginning with the VIX and with the DXY, the euro dollar. But you can see we're still within, look at it. We found support right at the bottom of the inside channel. You see this? So we have our move down. Will we get some type of reflexive move back up and print a massive macro double top? Or will we just get some chop here, potential weakness, and break down and start coming down to test the bottom of this channel, which depending where you fell is anywhere around 4,100 to 42 and change, depending where this actually would fall down. You know, esoteric perspective, the fall equinox is coming up, end of September. Okay, so we have the fall equinox coming up. We have market history here. Last time in August, sold off 19%. When did we bottom? August 14th, I believe, August 13th. That's when we bottom. So we have a big period of weakness historically showing up in the markets. You're seeing it in the price action. Now, having said that, let's go ahead and start back at the beginning. But that Jackson Hole event, guys, is going to be a key event in the marketplace. We're going to look at Bitcoin here as well as the European indices. And I threw on the Brazilian index here by request. So we'll go over that as well. All right. And the metals. Let's look at the VIX. VIX has been coming up a little bit, nothing to get excited about, but it is producing some volatility for day trades, guys. So the day trading has been fun, but you've been getting some volatility. You're at 15 right now on the VIX. You've got as high as just about 18, but again, in dumps, you typically see the VIX spike up over 50. You're hovering above your 50 simple day moving average here on the VIX as well. Looking at the DXY, just like we predicted, big move up. You got some selling pressure today, but you flipped a key resistance level if you close up here above the 618 at 102.743. So then I'm looking at 103.603 and then 104.699. Okay, higher dollar, higher VIX, pressure on cryptocurrencies, pressure on equities, and of course, pressure on metals. How's this reflecting in the euro dollar? Man, this really chaps my ass. This short that I posted in the room, I can't get over. I know I say it every video, guys, but I had this trade nailed and got kicked out. Very tight stop loss because I was in a very small time frame when I was looking at this trade. Got kicked out by that one candle, missed this massive drop to the downside. But for the euro dollar, from the perspective here on the daily chart, guys, from this perspective, you took out your pivot here. So you drop below that. You're creating some chop here. You're looking to potentially come down to 1.08681, which you almost kissed already. If you take this out, this is a system of valleys, okay? If you take the valley out, you're looking at your next valley. So let's go ahead and look at that valley and see where that would be. Go ahead and take this off and see how that lines up with fibs. From a fib perspective, you're looking at the 1272 at 1.07133. Okay, that's what you're looking at for that next valley. If you lose the one fib down here, that's your next stop right here in this cluster of candles. And then where is the next stop after that? If you were to keep getting weak here on the euro dollar, that's 1.056. And that brings you to this cluster of candles. Does this have to happen? No. Do you have a uptrend still intact of higher lows? Yes, you do, but you're getting volatility. You're getting weakness here in the zone. So something you want to pay attention to. And then flipping that back to the upside, you have to look at your 1.102 and your 1.106. Okay, those are your immediate upside targets. You want to see this basing process if you want to be if you're bullish here on the euro and bearish on the dollar, you want to see the basing process so this could come back up. But right now, with everything else, you're seeing the dollar put in some strength, okay? Let's go ahead and flip this over to the Dow, the DJI. Looking at this as well, we had this ascending channel that you've been trading in. You hit up here on the Dow right at the top of the channel. You got a double top type pattern here, print. You have volatility going sideways. And I saw some people DM me in the Discord and they're asking like, well, I mean, is this even tradable? We're just going sideways. Yeah, it all boils down to time frames. The majority of traders are day traders. Day traders drive the daily volume. You see that in futures. You see that in the 0-day options, but those are day traders, okay? So this is more of swing positions looking at these larger moves here in the marketplace. Where would I see the Dow coming back down to? Let's look at this. Well, the Dow still holding its key uptrend, okay? Because it needs to take out this pivot from where it pumped up from. And that's basically 34,399. It would have to take out this pivot. And right now, the first key level would be to sweep your low at 34,991 to have the Dow come back and test the 618 at 34,399. Ultimately coming back to test the bottom of the channel that you've tested every leg up, okay? So that's the Dow. And this is what people are looking at, guys. When we look at trading, and again, we have, our Discord has thousands of people on it. I don't even know what it is now, 12,000. But our Discord has thousands of people on it. If you guys want to check it out, I post my personal trade ideas on there as well as our other traders, our other staff members. But really, the community is fantastic there. Everybody shares their ideas. It's a lot of fun to talk with like-minded, freedom-minded individuals, people pursuing financial freedom. If you guys do want to join SimpleFX, where you can trade everything that I show you here on the channel, you can trade Forex, commodities, equities, Bitcoin, and a handful of other cryptos. They'll pay for your first month. If you want to trade on that exchange and try it out, then that link is in the video description. And the same with BingX, guys. That's where you can trade all the different cryptos, and it is accessible. BingX is another fantastic exchange. They'll pay for your first month for free. So there's no risk if you guys want to try it out and see if you get anything out of it. And I think a lot of you will. But this is an 8-minute chart. I like 8-minute charts. And this is on the Dow just as an example, because I had so many people message me, well, how can you trade these markets? These are really small moves on big time frames. Well, people zoom in, guys. You can go to the 1-hour chart, do a lot of trading on the 1 hour. This is an 8-minute. You can see you have a Wyckoff structure here, and you can see you have your base put in, your retest of the ceiling, another move down thrust, sign of strength. You basically built another mini cough up here, and then you broke down from the mini cough and you came back down to a new low. So you get volatility. This is why people like to trade bear markets. You get a lot of volatility. So even though when on a daily time frame or an 8-hour or 4-hour, it might just look like you're stacking candles, you can zoom in and you can find these trades based on patterns, based on whatever methodology you guys like to trade with. Looking back again at the S&P, guys, with the channels, let's go ahead and go to the next iteration here. Looking at the S&P, so what are our pivots? We've been over this many times, but people are going to ask me because today is the pivot day. So the pivots, guys, the pivots have provided sometimes the exact candle before a massive decline. Again, this was the last Jackson Hole meeting on the pivot. Look at this, the exact low before run up, the exact high, another CPI day before 8% drop, 8.5% drop, almost the exact high, another great retracement. These are all trades that I took and shared some of these in the room as well. And then we've had other pivots like the previous two that didn't decline much. from the high. I think we traded up here. This is a 130-point drop. Traded around here. This is a 100 plus handle drop. And now we have the current pivot. Difference being we have a decline. Are we going to get a rise up and then another decline? What will happen here? And a lot of that's going to depend on Powell and 10 days. He's going to be talking, I think it's August 24th to the 26th, guys. And if he does anything like he did last time, higher for longer, I don't think the Fed's done. I think you're getting at least one more rate hike, maybe September, maybe November. But the market is setting up. It had this massive multiple expansion to the upside. We've been over this many times, but volume, guys, volume has dropped incredibly. Even if we don't use this, which we could use starting from here, from the recovery from this upside, then the drop. Again, 3 million, 2.965, 2.867, 2.245. These are 61-day blocks. 2.2, 1.978, 1.13, down to 1 million. 1.03 million. You finished this block. So you've declined from 1.13 and then 2 million before that, and then plus 2 million before that. So again, what does that mean? It just means there's fewer people, there's fewer buyers, there's fewer people willing to pay higher prices. This is why you get topping structures in the marketplace. People, educated traders such as hedge funds and money managers, well, not all of, maybe I'm being too gracious by saying educated, but you start looking at risk reward, you start looking at, equity risk premium, you start looking at these things, and fewer people are willing to take the gamble here. So to me, again, what you need to break before you can get these bigger declines in the marketplace, you're toying with it right now. Your pivot, okay? Your pivot on the S&P, 44.59-ish. And again, if you look at this from a Fibonacci perspective, it looks quite simply like this. Your 618, which is what you're holding right now, bouncing off of 44.67, that would also take out this pivot if you start moving to the downside. And guys, you start taking out this structure here that you went sideways in Wyckoff in before the breakout. You take out that base at 4,300 and you have a long way you can go back down. You can go to 42.36, 4,005. Again, my next macro picture, not saying this is happening in the next 2 weeks, but my next macro picture for the larger pull down has the S&P based off of its retracements going to 3,200, sweeping your low. Because as you guys know, watching this channel, the market has never one time in history put in a low prior to a recession. So as with everything else, this is going to be your point of view if you think we're getting a recession or not. I choose the side of market history, looking at the leading economic indicators, looking at the inflation, looking at the history that we have for the marketplace. I 100% believe we are going to have a recession. Therefore, I don't think the low is in. When would you get the catastrophic collapse that you hear other people talking about? Your Peter Schiffs, your Harry Dents, your Jeremy Grantham. Well, guys, that would happen if you sweep that next low. Okay, and again, for me, the S&P, that's 3,200. You'll get a rally. The market will believe that's the bottom. And then if you sweep that low again, that's when we start looking at these sub 2,000 levels on the S&P. But that's so far away. I don't like to focus on that because we've made so many videos talking about it. And I like to trade. And I like to be in trades and trade these levels and get profits. And I know a lot of you feel the same way. But that is still the macro view, guys. When that recession actually bites or the fear of it, you're taking out the low. Okay, so all of my mindset is understanding that price can move up, price can move down, but in general, I want to know the general direction for the higher value trades. When I do believe we are overbought, there's a lot of potential for the downside. Okay, so that's what I'm looking at here on the S&P. The NASDAQ. Now, the NASDAQ broke its key support. Okay, the NASDAQ took out its pivot. And you can see this right here, just doing it this way with Fibonacci. You can see your key pivot structure was right in here. The NASDAQ fell below at 618, fell below the 786. It's hitting its head on the 786. Bitcoin's still holding up. The S&P still holding up. The Dow's still holding up. But what was the big performer in this big move up? was the NASDAQ, right? That magnificent 7 stocks they talk about, the previous FANG stocks. You know, you have the big runs up with the AI mega bubble, and you can throw NVIDIA in there as well. You had the big runs up, and now they're giving up a chunk of that money. And they need to hold in this area. If they don't hold in this area, and look at how your Wyckoff structure performed. There's your buying climax, there's your reaction, this is your high, your lower high, and your lower high. This is your Livermore pivot to the downside, and you had your move down here again on the daily time frame. Can you come back up and try to retest this again, printing some type of double top structure, most likely like on the 4-hour, 8-hour? You could, guys. We have to see what happens, but you have this nice move down right now. If you start sweeping this valley, you sweep this valley, you're going to have further declines here in the NASDAQ, and this has a long way it can drop, okay? Very long way the NASDAQ can drop just based on what it's doing already. Your 1 fib at 14,935. That's what, if you sweep this and start moving down, your bias will be to come and check the 1618, the golden ratio, 14,316. And you can see your 2618 would take you all the way back to 13,314, putting you back in this cluster of candles, once again, trying to hold a pivot high support. Then you have your macro Wyckoff structure that you pivot it out from. Lots of things to watch. The market's really grinding. I know it's boring, so I definitely appreciate you guys that have stuck around and watched these videos, because there are definitely trades to be had, and this is just the doldrums of August and September. This is why they say historically this is a bad time for the market, because volumes are low. They say people are on vacation, things like that. But guys, this is when you get big moves starting to set up in the marketplace. The Russell pumped up. The Russell fell to its 486, and you can see your Wyckoff structure. Look at this wave movement structure here. What does this remind you of? This reminds you of the Bitcoin chart, right? Your pivot out, your wave up, down, wave up, down. This is exactly like the Bitcoin chart. Why would I say exactly? Because the Russell and Bitcoin, we've been over that many times on this channel, made their all-time highs in November 2021 within 48 hours of each other. The Russell's small caps, a lot of tech companies in there, a lot of those regional banks in there, but for whatever reason tracks extremely closely to Bitcoin. And again, your higher low structure is still intact. You're at the 486 retracement, 1916. Where are you in trouble? If you sweep this pivot top, 1891. Come below 1891, your bias will be to return to the 1 fib, which also is the base here, and the top of your Wyckoff, the base of this valley. You sweep that, your bias is to go to the 1618 at 1701, retesting the bottom of your Wyckoff range. And again, this is all going to take place over the next period of, I don't know. I guess the next big catalyst is going to be Powell talking on August 24th, 26th, his Jackson Hole speech. Will we get this type of move where we can trade a double top? That would be great. Big macro double top. Or you're just going to see the slinking down, the stair step pattern that often happens when markets get overbought and you have weakness come into the marketplace. Looking at Bitcoin, guys, like I said, exact same pattern, right? Look at the pattern. Wave up, wave down, wave up, wave down, wave up, drifting, but still holding key support, just like the Russell. Bitcoin getting a little bit of a pump here. As you can see, again, this is our macro Bitcoin bull case pattern here with our wave symmetry, 63% up wave, 59% up wave, 61% up wave. The geometric mean is of the prior two waves is 61%, which would take you to 39,791 if the markets were to get more bullish. Again, the corrections have been symmetrical, 22 spot 65, 20 spot 26. And of course, if you correct it from where you are now, that brings you right back to your valley, right back to your neckline of your potential massive double top, okay? So this is something you have to pay attention to. And again, this is a 3-day chart, but we can trade Bitcoin on any time frame. And as you can see on a 3-day chart, you roll down, you're trying to get a little bit of a roll up. You'll see if this presents like a double top potentially on a maybe a daily chart. Let's go ahead and look at the daily chart. Daily chart. We've been talking about this for a while, the move that's potentially coming in. Look at the compression you're getting on our gummy worm. This is our market makers Bollinger Bands. If you look at that compression, you're going to get a move. You can see the explosion. You get expansion when you have the market movements, compression when volatility, candlestick patterns are tight. And that move right now looks like it wants to break out to the upside. But the key again is to what level, right? Is to what level? Because when you look at this, your retracements, like I said, Bitcoin's still safe here in the macro sense. Let's turn our worm off. But Bitcoin's still safe here in the macro sense. You're bouncing off the 382 at 29,124, the 618 down at 27,455. That's the area you really want to watch if you do start making your way down to it. Because again, flip the 618, bias to the 1 fib, brings you back. And again, macro double top at that level. Okay. Macro double top. But if you do want to come up, we've been talking about this. I just showed you the projections for this. Okay. We've been trading this Bitcoin in and out of our Discord, by the way. One of our traders shorted it up here. I posted a short here. We caught this nice, I think off my trade it was 17, 18%. Let me look really quickly. Just grab a candle. This was, 17.5%. And then we've had trades down here at the base for the pump up. And then, of course, we have day trading that happens in the room as well, guys. But, lots of trades there on Bitcoin. That's the great thing about Bitcoin is it does move around and people do enjoy trading it. But let's look and see where this could come up to here. Simple fib retracement. Where you want to look at is 30,575, your 618, your 786, 31,125 puts you in this upper echelon here of where Bitcoin has really struggled. If you look at this on the 3-day chart, something I wanted to point out to you. If you notice, look at the cluster of candles. Again, 3-day candles. Not one single candle has closed above the 1618 projection on my 5-wave harmonic pattern. Not one single candle, 30,825. Okay, so that is a key level. You've certainly got wicks above it, but you have not closed above it. So flipping 30,825, which is only, 1,200 points away. Flipping this is absolutely crucial to look at any more upside to 34.7 or to that 39K level. Okay, you have to flip this. If you fail here or slightly below, again, you got to watch and see if you put in a double top structure, and that's going to vary depending on what's happening in the marketplace. Right, with the equities particularly. If you look at Bitcoin on the MFI, you're in the bearish territory. Momentum, you can see the squeeze here on our market maker master momentum master indicator. You're getting squeezed here. Again, volatility is compressing. You have to be careful because Bitcoin likes to do your stop punch and do things like that. Right, looks like it's going to go up, head fake, boom, falls down. And again, you can see that potentially a wave pattern here for a double top looking pattern. So be very careful if you're looking at Bitcoin. And, we'll see how the markets want to behave. Again, everything is just kind of on the daily time frame. If you look at it, French 40, chopping around, right? You're chopping around. You're in Wyckoff structure on a lot of these things, and you're holding support here on the French 40 at 73.13, and above you guys. You have the 1618 at 75.56. Again, here's your new all-time high over here, just above the 1618 off of my harmonic projection for a 5-wave pattern. And so we'll see if this does anything. You're stuck between 74.02 and 73.13. You've been here for a few days. You had a wick above it, and you're just going sideways. Everything's just waiting for a catalyst. You just get that sense that the markets are just waiting for a catalyst to step in. If you look at your money flow, you're still in the bullish territory, riding the median line. You're getting compression on the daily time frame, just like Bitcoin, just like many other assets, because of the candles stacking so closely together, giving you a sense of an incoming move. Looking at the German 40, it says German 30 still, but they added, I think, 10 stocks to it in 2021 or 2020. So it's really the German 40, the DAX. But you can see here, you have a Wyckoff structure sideways, but I also captured this in a channel because it's been trading so beautifully in a channel. And you bounced right off our bottom channel trend line. DAX at 15.9. 59, your immediate resistance is 16, 16.1, 16.2 is your 618. But again, multiple days now, watching paint dry, side-by-side candles, okay? That's what you have on a lot of these assets. But again, if you go into the DAX on the 1 hour, you can see there's trades you can take in this area if you guys decide to day trade anything, which again, most people do. Most people do day trade. But there are definitely trades, up thrust, down thrust, moves up thrust, coming down, making lows, and then chopping around, okay? So there's opportunities depending how you view the market. Now, by viewer request, por mis amigos no Brasil, this is the Brazilian index, okay? So the Brazilian index. Now, lots of hoopla here in the USA on money managers talking about oh, I like the European indices, or I like, Brazil's been mentioned because they're very rich in commodities. They've been blessed with having a lot of natural resources. But let's look at this, okay? So Brazil, you had, where's your pen? There's your pandemic. Your all-time high happened in June, okay? So this is your winter, our summer here, in the north of the equator. This is our summer here. So your winter, you had your all-time high. And since then, lots of similar chart patterns. You're going to see this across the board, right? This is how money flows through marketplaces. But essentially, you have a massive Wyckoff structure here as well. Go ahead and show you this. You have a massive Wyckoff structure, just like many of the U.S. indices did this as well. We had this on the NASDAQ, the S&P. You can see your volatility, your down thrust, your chop, your down thrust. Now you just made an up thrust. And then you have smaller Wyckoff structures within these as well. But let's go ahead and zoom into this. You can look at this here. And if we did this, go ahead and Wyckoff this structure in. You have our buying climax or reaction. You can see the volatility here, your down thrust, your sign of strength. You tried to make what? You tried to make your Livermore pivot to the upside. There's your test of your base, came back up. But again, what happens when you fail a pivot? You make a double top and you came back down. Now, if we want to combine this with fibs just to look at this move, you can see you fell just below the 786. The 1 fib 115703 is what you don't want to lose, okay? Because again, just simple, even without fibs. Start making these lower high structures. There's your high, there's your lower high, make another lower high, come back out, you fall out, you back test this area, and you move down, okay? That's just a simple way to view this without even looking at fibs. Looking at fibs, though, from our up leg to where we are, you have some ways you can fall down. You still have the 382 is substantially lower after this kick out to the upside, okay? So we can move this to this last area here where you impulsed out. And you can see that you fell below the 382. You're 618, 11,390. So 11,390 really is the test here. If you come back and flip this, 11,390, again, bias will be to come back down to the 1 fib, your origin point over here for this previous impulse up. Now, I haven't been tracking Brazilian politics as closely as I used to because I don't have a lot of time. I used to manage an office in Sao Paulo. I speak pretty good Portuguese as well. But this is something that, it is worth paying attention to. You can trade multiple things, guys. You can trade all around the world. But in general, when markets move, they tend to move together. You do get divergences. You'll have one market do better than another market. But if there is a collapse type situation, and you will see it, you'll see it around the world, just like you did in the GFC. U.S. markets crater, the world's largest market. Everything else will come down in sympathy to some degree. Some will hold up better than others. Let's go ahead and look at gold. Gold here is your gold chart. Now, lots of people still bullish on gold. We talk about this all the time, so I'm not going to beat a dead horse. And there's reasons to be. Again, you have your lower high or your higher low structures still intact. We talk about this, but this moves with the equities. Show you guys this every single time. Just throw the S&P on here on gold. You can see your rises, your peaks and valleys with the S&P. Here's your current peak. Here's the S&P. Gold trying to rebound. Just be aware of this because I do believe gold and silver, just like the GFC, will collapse with the markets and then make a parabolic run back up. You can see our uptrend line, which we did break below. You lost your 618 at 1929. The key level here, guys, is the very base here is 1893. I told you guys 1900. You got down to 1900, but your very base here that you do not want to lose is this valley. Okay, you lose that valley, you're coming down to this pivot top down here. Somewhere around 1867, 1834 would be the next stop for gold if you do fall below 1900. Again, gold went down 34%. 34% back in the GFC. Silver, 61%. Looking at apples is good to look at. $3 trillion, well, it was $3 trillion. Big gap on the sell-off down. Apple's first time they put up 3 quarters of negative growth. First time since when? .com, right? But people I see on Bloomberg, they're accumulating Apple here. This is the exact pullback they were waiting for. So could we have more volatility with Apple? Could be, guys. But again, events are happening. Things are in motion. The economy is slowing down. Powell's given a big speech here in 10 days. So we'll see what happens. Inflation kicked up, regardless of what the media tells you, how it came in line. Inflation went up. It went up from 3% to 3.2%. It's projected to go up by the Fed even higher for this next print. The Fed knows this. I expect a hawkish Powell. And just like we had, this is a potential. Just like we had last Jackson Hole, could Powell end up triggering a move like this? If he does, breaking our top channel, coming down to retest the next channel, that's your 4100 range. You break that channel, guys, then look out below because we're going to come down and retest our lows. All right, hope you enjoy the video. Next video will be Thursday. Like and subscribe. Consider checking out our Discord. Support us by supporting our sponsors. Check out SimpleFX, BingX. Take care, everybody.